You definitely don't want to miss this information. We've discussed the buyback idea extensively at the board level. The board generally thinks that it makes sense to do a buyback, but we want to work through the proper process to do a buyback. It's certainly possible for us to do a buyback on the order of $5 to $10 billion. Did you know that the Tesla stock community is optimistic that a Tesla stock buyback will happen for months now? Tesla investors have been airing their pleas for Musk to buy back Tesla shares. Now, they are almost positive that Musk will do just that. During the most recent Q3 2022 earnings call, Elon Musk, the CEO of Tesla, discussed a number of topics, including a potential repurchase of Tesla stock. Musk noted that even in the worst-case scenario for 2023, Tesla still has the capacity to undertake a $5.10 billion buyback. Of course, this is still clearly awaiting board review and permission, but it's possible that we'll undertake some significant buybacks. Musk continued by saying that whereas market teams prioritize the short term, it's crucial to concentrate on the long term. Even Steven, in a recent video, Steven said that while he would not be surprised if there were Tesla stock buybacks in the coming quarters, the stock market would likely be taken aback, which could lead to a potentially much higher price for Tesla shares. Steven also referred to a research update from S&P Global Ratings on Tesla, which was released in early October. S&P Global Ratings upgraded Tesla to BBB from BB+ due to improved production and strong cash flow prospects. Mark Ryan, a content creator for the channel Solving the Money Problem, believes that Tesla stock buybacks are likely. In the Rating Action Review, S&P Global Ratings, American credit rating agencies, and a section of S&P Global that publishes financial research and analysis on stocks, bonds, and commodities, came to the additional conclusion that Tesla's outlook is steady. Several points were highlighted by Global Ratings. First, according to Tesla Incorporated, its production and deliveries for the 9 months ending September 30, 2022, were either higher than anticipated, and the company's plan to ramp up its global capacity in order to satisfy the high demand for its products through 2023 looks to be on track. Second, the agency now has a more positive opinion of Tesla's credit profile due to the company's continued market leadership in electric vehicles, strong manufacturing efficiency, high EBITDA margins, and continuous positive free operating cash flow, which exceeds their previously set upside triggers. Third, and possibly most significant, Global Ratings upgraded Tesla's ratings, which included BB+ to BBB for the issuer credit rating and issue level rate readings. In conclusion, the agency stated that the steady outlook indicates their belief that Tesla will continue to maintain low debt levels while maintaining its significant market share, profitability, and liquidity in the face of a faltering economy and a more competitive landscape. For EVSSP, the rating action rationale was also supplied by Global Ratings. First, production and deliveries for Tesla's year ended September 30, 2022, show that the company is successfully expanding its capacity to meet the company's increasing demand for its goods despite continuous supply problems. The rating agency now expects Tesla to sell 2 million units in 2023, which will help sustain its solid market share with Nevada amid intensifying competition and aggressive launches by automakers globally. Additionally, the agency expects Tesla's global market share for beverages to remain in the 15 to 20% range over the next 2 years. Our improved view of Tesla's business supports its prospects for solid and sustainable free cash flow over the next few years in 2022 and 2023. The research note states that Tesla produced more than 365,000 vehicles in the third quarter, bringing its year-to-date levels to nearly 930,000 vehicles, up nearly 50% year-over-year on track, with its average annual growth target over a multi-year horizon. With industry-leading EBITDA margins of over 20% compared to the upside trigger of 18 and well above our 10 threshold for above-average margins for autos, Global Ratings estimate Tesla to sustain FOC to sales of over 10% compared to the previous upside trigger of 2%. Nevertheless, as the global economy weakens and EV competition intensifies, the rating agency predicts that high costs associated with the ramp-up of its Berlin and Austin manufacturing facilities, ongoing supply chain disruptions, rising commodity costs, solid technical capabilities, and an expanded range of affordable products will be critical. With respect to the worldwide light car market, Tesla's scale, scope, and product diversity are currently restricted to a 1.5% market share. Market, which is projected to reach around 80 million units by 2022, is expected to maintain its rapid expansion, maintain its first-mover advantage, and increase its market share. It will be necessary for Tesla to lower the overall cost of owning an EV, including insurance and maintenance expenses. Lastly, given Tesla's substantial cash and our anticipation of a cautious with over $18.3 billion in cash and cash equivalents as of June 30, 2022, and some global ratings estimate of robust cash flow, at least through 2023, financial policy provides a cushion to the BB grade. The agency believes Tesla will continue to retain its excellent liquidity. The research note clarified that with more cash on its balance sheet than total debt, these levels are significantly beyond the benchmark set for Ford Motor Company and General Motors Company. It seems that Tesla will have no trouble financing its global expansion, even in the face of industry supply chain and logistics obstacles that are expected to last until 2023. The research node further stated that in an increasingly competitive environment for EVS's business, the rating agency expects Tesla to keep low debt levels as it maintains its significant market share profitability and strong liquidity, which is reflected with the stable outlook. Global ratings also provide scenarios in which, depending on a certain circumstance, the ratings could be lowered. Tesla can either maintain a solid focus due to slowing growth or higher than expected spending, or it can adopt a more aggressive financial policy with regard to shareholder distributions, growth of its captive finance operations, other business segments, and acquisitions, such that financial cushion reduces materially. The rate trading agency may reduce Tesla's rating in one or both of the scenarios, but it may also increase Tesla's rating if a single Tesla maintains its first-mover advantage. Benefits as EV demand rises and competition gets fiercer, making it more possible that the company's global light car market share will surpass 5% and that it will continue to generate free cash flow as it has in the past. If Tesla continues to perform well, experts believe that a Tesla stock buyback is just around the corner, of course given that the board approves of it, which investors can only hope for. However, beyond 2024 and 3, it remains committed to a prudent financial policy in line with a higher rating. Some may wonder what a stock buyback is. A stock buyback, sometimes called a share repurchase, is when a business uses its accrued cash to buy back its shares from the market. A stock buyback enables a business to reinvest in itself. The company uses the shares it has repurchased to reduce the number of shares it has outstanding on the market. Buybacks are advantageous to shareholders because they increase the proportion of ownership held by each investor by lowering the total number of outstanding shares. In addition, companies benefit from stock buybacks because they can preserve stock prices, consolidate ownership, and replace dividends. Investors benefit from repurchases because they receive their capital back, but repurchases don't always benefit investors. Musk seems to have alluded to a Tesla stock repurchase even before he officially announced the intentions during the Q3 results call. Around the second week of October, rumors about a buyback began when Musk replied to a tweet from Leo Kogawan, an Indonesian businessman who claims to be the third largest private investor in Tesla and who stated that the company's PE ratio compression could only be resolved by a buyback or a twofold increase in earnings. Musk's straightforward response was observed, which stoked rumors that Tesla may initiate its first-ever share repurchase. As a result, demands for the producer of electric vehicles to allocate a portion of its huge cash reserve to investor returns increased concurrently. In an open letter to the Tesla board, co-founders Gary Black and David Callis of the Future Fund, the largest investment of which is Tesla, proposed a $10 billion share buyback. In our opinion, Tesla is now running its business with exceptional financial soundness, holding $18.9 billion in cash and marketable securities and having almost no debt. We think that this is a rare chance for you to purchase your shares, so please subscribe to our channel and stay tuned for the most recent updates on Tesla stock.